rate of tax for trusts. Rate of tax for trusts. First, public trust. Public trust we have already seen in section 11 and 12. If you claim exemption, after claiming exemption, if the income is going to be less than basic limit, nothing to be taxed. But then why? If after claiming exemption under 11 and 12 because of applying the income for charitable or religious purposes, the balance income is exceeding basic limit, then that portion of the income becomes chargeable to tax at AOP, as AOP. Right. Section 164, subsection 2 says two things. Rather, one can say three things. Out of the total income of the trust after claiming 11 and 12, first, where 13(1)(c) or 13(1)(d) invoked, where 115 BBC comes in, other cases, other than these two. After claiming 11 and 12, if the income is exceeding basic limits, the trust doesn't exercise the option of 11 subsection 2 etc. Then that is total income exceeding the basic limit, and that income comprises something because of violation of 13(1)(c), 13(1)(d), that income is taxable. Because of violation of 13(1)(c), 13(1)(d), if the income becomes taxable, that portion of that income will be chargeable at 30%. Second, if the income, irrespective of its application or accumulation etc., if the income is of a nature of section 115 BPC attracting income, anonymous donation, then after giving effect of 5% of total donation or 1 lakh, whichever is higher, balance will be chargeable to tax at 30%. Excluding them, remaining income of the trust exceeding basic limit will be chargeable to tax at normal rates like an AOP. That means slab rate would apply. Now here, whatever you exclude, that 5% of the total donation or 1 lakh, whichever is higher, need not be applied for charitable purpose, that need not be considered, it can be excluded. Because of violation of 13(1)(c), 13(1)(d), if the income is liable, that portion of that violation, amount of income applied directly or indirectly for the benefit of the specified persons, amount remain invested in a mode other than 11(5). These portion will be chargeable to tax at 30%. 115 BBC, excluding the threshold, balance will be chargeable at 30%. All other cases, other income exceeding basic limit will be liable for tax at AOP rates, that means slab rate would apply. Again, basic exemption will not be liable, balance only will be liable. Then we have private trust. For a private trust, what is the rate of tax? Now, when the share is unknown, share of parties, first we will say share is known. Mr. A has got two grandsons for whose benefit he is creating a private trust. The beneficiaries are identified, targeted, capable of clearly identified as to who is going to get the benefit out of the trust. That case, private trust share is known. Now we have two things. That private trust is running. Case A, business. It doesn't have business. Private trust has business. Another case, it doesn't have business. Two classifications. Now, let us say the trust so created by the settlor is the only trust created for the benefit of dependent relative and that is created by will of the person. It's a only trust created by the settlor and that too created by will for the benefit of the dependent relative. In that case, whether or not you have business, the rate applicable to each beneficiary applicable to each beneficiary apply. Suppose a trust has got two people, both of them are already having income liable to be taxed at MMR, this income will be liable to be taxed at MMR. If one person has income partially liable at basic slab and partially over and above that in first slab, unexhausted first slab, include this income to that portion gets exhausted, first slab exhausted going to second slab, then at that rate it has to be, right. If this is not the case, other case, that means a trust is created not by will, not the only trust, not created for the benefit of the dependent relatives of the settlor. If you do not have a business, no problem, same rate would apply. If you do not have a business, same rate would apply. If you have a business, then maximum marginal rate would apply. If you have a business, maximum marginal rate would apply. So this is what is said in section 161, 1 capital A and 164. Now if we have identified what is share known, now we need to identify a scenario where share of the beneficiary is unknown. Share of the beneficiary is unknown. In that case, we have certain classifications. What are they? First, now here again we have business, the trust is carrying on business, trust is not having any business. Now the same scenario will apply, only trust created by will for dependent relatives of the settlor. Whether or not you have business, there is a concession to tax it at the rate applicable to AOP. At the rate applicable to AOP. Now, slightly will differ this. Second scenario, only trust created by will for independent relatives. Not for dependent relatives. In that case, where there is no business, it will be AOP. If there is a business, it will be MMR. Once there is a business MMR, no business AOP, but concession is available only for this. Now, for trust not by will, for dependent relative, created before 1370. There again MMR AOP. Then second, beneficiaries are not beneficiaries of any other trust beneficiaries are not beneficiaries of any other trust and not having income exceeding basic limit. In that case, where there is no business, even if share is unknown, you will have to pay tax at AOP rates. If there is business, then it will be like MMR. In case others, none of these concessions are applicable to you. In that case, in others, both the cases MMR. In other cases where you have business or not, the rate will be at MMR. So, when the share of the beneficiaries are unknown, when the shares of the beneficiaries are unknown, but that trust happens to be only trust created by will of the settlor for the dependent relatives of the settlor, then it will be AOP for both. Only trust created by will but independent relatives, where business MMR, otherwise AOP. Trust not by will for dependent relative, of course, created on or before 1370, business MMR, non-business AOP. Beneficiaries are not beneficiaries in any other trust and not having income in excess of basic limit of that year. Business is there MMR, business is not there AOP. All other cases, whether or not you have business, it will be as MMR. There is another concept called oral trust. Where there is no trust deed, trust is created by oral. Within 3 months from the date of creation of trust, you prepare a statement and say, this is the settlor, this is the trustee, this is the beneficiary, this is the purpose, and forward it to the officer within the stipulated time. Then the treatment will be like this, depending whether share is known, unknown, private trust share is known, share is unknown, depending on that scenario it will come. In a case where no statement forwarded within the stipulated time, no statement forwarded within the stipulated time, whether or not you have business, no business, in both the cases, since statement is not forwarded, the rate of tax will be at MMR. So, how to remember these principles? Where share is known, rate attributable to each beneficiary. Exception, where you have a business, MMR. Even in business, if the share is known, MMR will not come if the trust is the only trust created by will for the dependent relatives of the associate. The share is not known. Generally, where business is there, MMR will come. Business is not there, AOP will come. Even if you have a business, MMR will not come, AOP will come in a case where trust is the only trust created by will for the dependent relatives. Even if you not have a business, it will get MMR. Exception these three. When no business, it will be treated as AOP. Oral trust, no statement forwarded, whether or not you have business, MMR. Share is unknown, only trust created, AOP. Otherwise, except these three cases, always MMR. In these three cases alone, Business is their MMR, business is not their AOP. This is how the rate of tax applicable for the public and private trust need to be looked into. Here one has to be extremely careful. One should not be misguided with this. The income comprises of whether or not that income is applied. So total income may be less than the basic limit, but if your anonymous donation is available here, still liability will come. Irrespective of the application or retention or accumulation, it will suffer tax at the rate of 30%. One. Second, the threshold you have to exclude from the total income. Threshold has to be excluded from the total income. That needs to be borne in mind in this case. So this is regarding the rate of tax for public and private trust.